Hello everyone, it's their finale with RMI LLP. I hope you're having a fantastic week. Today I just wanted to touch on a topic that's been coming up more recently, and that is what happens when you move away from Canada from taxation standpoint. So we've recently been getting more questions about people who are looking at moving, whether it's for work or whether it's just for enjoyment purposes, but essentially they want to become non-residents of Canada. Well, there's a couple things that we need to always look at. One is what happens if you still have property here or if you still have assets here. And two, more importantly, what are you leaving behind or what are you taking with you that you might be subject to tax on? So the first one is, let's start with the second one. And what happens when you leave Canada is there's something such as the exit tax. So many of your assets, what we have to actually do is dispose of them at fair value when you leave. Now that means you might not sell it directly, but we still have to treat it as if it was sold. So for example, you might have some stocks in a stock trading account. Well, we have to determine what the gains and losses are when you move away from Canada. That becomes income to you on your final tax return. Now, you might leave some assets behind, for example, a property. So a common example is you might have a principal residence that you're living here. You would decide you're going to rent it out. You might just keep it here for a couple years. The good thing is there's no tax on that when you leave from the exit tax standpoint. But what happens next? And when you have property or assets still earning income in Canada, you can become a non-resident as long as you still meet the criteria for it. And what has to happen is you have to file a tax return based on income you're earning in Canada still. So if you have that property and you make it into a rental property, each year you'd be subject to filing a tax return in Canada on the income you earned on that property. Now, more importantly is there are some non-resident slips that you need to factor in. So there are things people might be familiar with the terms of NR4s or NR6s. These are very important documents to file as a non-resident who has property in Canada. And the reason for this is the taxation can become a little bit complex in terms of where the tax and where the deductions are going. As a non-resident, any income is subject to withholding tax, and therefore you do need these slips to be filed regularly on an annual basis to calculate how much withholding tax was done, paid to the government, and how much tax you are subject to. As you can tell, it does get a little bit complicated in this manner, but don't worry, we're always here for you. So if you have any questions, feel free to reach out. And once again, thanks for watching.